So which screen is it going to show? All right, here we go. Cool.
The broadcast is now starting. All attendees are in listen-only mode.
Hey folks, good afternoon. Steve Vetterl here with FXES Trader. Welcome to the Thursday webinar presentation. Wonder if you guys would be kind enough to please just do a quick sound check, see whether or not everybody can hear me. Just type in a yes if you can, please. Okay, looks like everybody can hear me here. We're in the process of just doing a sound check. If you guys don't know who I am, my name is Steve Vetterl. I'm one of the traders here at FXES Trader, one of the guys that does all the posting on Twitter too, if you guys follow me on Twitter. But wanted to do a series of webinars really because I think that too many people get too caught up in looking at different indicators out there, and everybody's trying to sell the hot indicator or the hot trading setups. And I think one of the things we've tried to do in building out this website and our whole training and coaching program is to just give everybody what we feel should be the kind of education that a real trader has, or the path that I've gone down as a trader. I've been quite disturbed and to a lesser degree certainly pissed off by a lot of the folks that are out there doing this, and I just don't think they take the right steps to getting a potential trader consistent profitability. So I wanted to sort of build out a webinar series to kind of address that, and really that's all our focus is in building this out, is to get our clients to consistent profitability. It's really the bottom line. The path to that can be long and arduous depending upon what route you take. Another big reason we wanted to build out this site and a whole training and coaching programs is to cut that learning curve by at least 2/3. As you guys have probably heard, if you want to become an expert in anything, you've got to put 8,000 to 10,000 hours into becoming that expert. I've probably at this point put in about 9,000 hours in trading since I started doing it in 2003 once I left my previous firm. So if you guys want to see anything about my bio or any of that on LinkedIn, feel free on our homepage, which you can see at the bottom of this screen. You can get out, look at my bio, and so forth. But essentially, I started off in the industry as a trader back in 1996. Got a job with Fidelity Investments, parent FMR Corp in Boston. And throughout the course of the first 4 years, spent a lot of time trading options for big clients on their options desk, and did a lot of spreads, condors, straddles, all that fun stuff. I got the opportunity to move back home to Philadelphia, where I was originally born and raised, to work in the Philadelphia office as more of an analyst and raising capital for the firm and their private client group. I left Fidelity in the spring of 2002 to join Ken Fisher's firm. He is a big investment manager out of Woodside, California, if you're familiar with Fisher Investments. They do a mass load of advertising, so forth. One of the things I discovered throughout the whole asset management career is that most investors, the big smart guys, these guys do a lot of trading. The buy and hold strategy is very rarely in place with the personal portfolios of a lot of these guys. So in the spring of 2006, my partner and I left to form a small long-short fund, one of, obviously 35 plus strategies that you can operate in any type of fund. But we basically wanted to start a small hedge fund to go through and, provide a more flexible portfolio that had the ability to hedge than just a diversified long-only portfolio. So we took a number of clients from our previous firm, and we still operate a private portfolio for these clients today. But throughout the course of my career development as an individual trader since that time, I have been very disillusioned with what's being presented out there to traders in the form of any type of coaching and mentoring. A lot of these guys are not consistently profitable. They're selling all kinds of programs out there, and it is it's difficult to see a demonstrable track record. So when Twitter came about and I started getting active on Twitter a few years ago, I said, hey, here's a way to timestamp somebody and to hold them to the fire. Are they consistently profitable? So if they're looking to put a program together and teach folks in whatever manner, then it would just be advisable to me that you're dealing with somebody that's a real trader. And this is kind of the problem I've had. So, in my, I don't know, maybe my sort of quirky pay it forward type of way, plus the fact I've moved to Southern California for family reasons, I have a lot more time in the afternoon because the market closes at 1:30 Pacific Standard Time. So looking at, what can I do to, sort of pay it forward, develop a secondary business as well as, help understand, the type of coaching and mentoring that needs to take place to get somebody to consistent profitability. So over the last year, I've put an exhaustive amount of effort into compiling a program with the help of one of my good friends from high school's big marketing company in Florida. They built a Ferrari of a website for me. And basically, I'm going to start this as the first of 4 webinars on the core of what I think is the most important indicator out there, and that's market profile. So if you guys would please, with just the overview, I guess I have a quick poll, and really nothing more than just putting a yes or no answer in. Who in the group has traded futures, and have you used market profile? So either, yes, yes, or no, yes, or double no. So I can have at least a feel for where everybody stands in their education process on this particular type of theory I'm about to show you. All right, cool. So it looks like most of you have. That's actually going to save us all a lot of time today. So the key to auction market theory and sort of our overview today is, what is it? You guys may already know what this is, but, why is it important understanding markets? There's so many people out there that say, well, you need to trade this way and this way. And at the core of it, you need to understand the auction process. So we're going to go through, what is auction market theory real quickly. What is the market profile chart? Looks like a couple of you that just joined late, you are not as familiar with market profile, so I'll touch upon it real briefly. But more essentially, how can we use it to frame the auction process? Why is market profile important in being consistently profitable? And quite simply, the first line under that is the most important thing in this entire presentation. Because basically in one chart, you get the context of whatever time frame you're looking at, whether it be a profile 3 days, 1 day, a month, an entire year, a particular balance area, as we've certainly seen above 1600 here on the ES. So, and how market profile puts that theory into practice. And I'll actually go through, since a lot of these charts don't fit on a PowerPoint presentation, I'm going to jump into my Market Delta software and show you guys exactly, how I have my stuff set up, and more importantly, be able to teach what, sort of high level you need to take from this. And depending upon where you guys want to go with this in our time today, we can drill down into, attributes that give you an edge in trading and go through the 6 steps to consistent profitability. So for the folks on this presentation that maybe doesn't know a lot about market profile, I would highly suggest going through and buying this book. Market profile and the theory behind the auction markets was developed in the early 80s by J. Peter Stettlemeier, and he is the sort of grandfather of all of this. The problem with a lot of Stettlemeier's stuff, whether you look at any of his presentations that are on CME's website or you go through some of his past stuff, is it's very difficult to understand. It's like reading a book on DeMark. If you know much about the Tom DeMark indicators, if you've ever seen a presentation by Tom DeMark, the guy's an absolute genius, but his stuff, you just get completely lost in the math behind it. So, kind of like Elliott waves. I like to joke often, but this is a great book. Buy it on Amazon. Probably find it somewhere on the web. I don't have the book scanned into a PDF, or I would probably offer that to you. The book I do have scanned into a PDF that I can offer to you is the second book that James Dalton wrote, which was later in the 2000s. It's called Markets in Profile, which is more about just the profile itself, which I still think this book does an excellent job in doing. So going through auction market theory, which is the core of this presentation, is, what is it? It really is a theory behind understanding what the market is saying. So it's based on observable facts, takes the entirety of the market data and other information and compresses it into a set of assumptions and rules, leading to a consistent, intelligent trading strategies. That is so key. I have so many friends that are really good, profitable traders I've met via Twitter or what have you, or my early associations with Goldman Sachs when I started my fund, that have been trading for a long time, but they still don't understand context. And, the resulting structure that the theory teaches you, helps you understand the migration of value and how those changes in value affect price. Because, the bottom line is that value is the dominant variable in the markets, and it's driven by demand, which is the order flow. So, the textbook's definition of auction market theory I found in places like Investopedia, Wikipedia, I didn't like it. So I didn't think it was really relevant to understanding it. But just keep a basic, high-level view of the fact that, buyers enter competitive bids and sellers enter competitive offers at the same time. So it basically represents the highest price that a buyer is willing to pay and the lowest price that a seller is willing to sell at. So you're matching bids and offers, and they're paired together, and orders are executed. It's that simple. So with that in mind, the market profile chart is the best place to start. And one thing that's probably going to come up in some questions, and we're going to have a pretty decent Q&A at the end if you guys, feel free to ask away. If you have questions as I go through this presentation on market profile, as I'm just going to basically touch on a real high-level overview of this chart, type your questions in. The moderator on the my buddy Eric can, prioritize the questions, and we'll go through a complete Q&A at the end on that. But, type them in as you think of them so we can help you out. But essentially, this is a market profile chart. This snapshot was taken a few days ago. I wanted to avoid the lunacy of the last 2 days because it would make it hard to describe what's going on with the profile. But this one was shot as of the 11th and the 10th, the two main profiles that you're looking at. Don't be confused on my chart. If you see at the bottom the date 6/10, and then after you see 9/30, basically 9/30 is the opening of what's called a regular trading hours session. So this is for the E-mini S&P 500 contract, trades in the CME, and I have a split profile chart where I break out both the Globex session. Let's see how well I can draw with this little pen thingy here. This is the Globex session I have highlighted here, and it'll give us a good example of how to look at the profile. So with any profile, these numbers are going to look, and you can always set these charts up any way you want, but essentially they're a group of letters, or what's called TPOs, time price opportunities, that allow us to frame what's going on inside the market. So look at this as really just a picture frame, and you're looking to frame what's going on in the auction process. Is it going up? Is it going down? Is value being built higher or lower? Was there a spike in price? You can glean so much information off of this chart that I have two friends that trade with me here in Southern Cal, down the street in San Diego, that actually can be consistently profitable just off of trading the profile, which is tough. But these guys know their stuff. They know the patterns. They know the statistics cold. And, you know, they've shared a lot of that with me. It's great. Helps me out. I still use this chart in tandem with a candle chart. But this chart in one frame, depending on how big you want to make this window, gives you a complete picture or context of what's going on inside the market. So looking at the definitions of these particular types of terms you see here, it's really nothing more than a value area high is this magenta bar. The initial balance, we're looking over, better yet, in the regular trading hours session right here. This is the RTH profile. Let's see if I can write here. This ought to be good. There we go, RTH, cool. So the RTH session is here, and as you can see, trade opened up right where you see the O, which is called the opening print. And when I start mine off in D bracket, you know, some people start their market profile charts off with different letters. I follow almost the same strict guidelines that the software guys, which is IRT, which is Linsoft, and Market Delta, which is Trevor's company, looking at how they build it out. But I typically start my RTH profile off with the bracket D. So each of these represents a bracket that forms of the prices that execute throughout the course of the half an hour that each of these brackets represent. So as we move from D to E, you can see how the opening print and the initial balance, which is nothing more than the combination of this red and blue bar as a whole, initial balance being high and low, low of the day in this particular case, the auctioning process took place. The E bracket, which forms at 10 a.m. New York time, which is basically the next bracket that starts building out right here, begins to auction and print prices. The thing I love and why I still think this is one of the most powerful tools is that in one chart you can see both time and price, whereas with most other conventional systems, including the footprint chart, which I love, you can only see price. You can't see the calculation of time, which can be almost as important in movements of value or initiative buying or selling up or down. And in the end, it's all about order flow and context, as many of you already know this, but I think that goes without saying. Let me just erase all this stuff. So for those that aren't familiar with this, the profile begins to build out over the day, and you can see how much time it'll spend at each price level. There is a point of control that builds, and the point of control is nothing more than a peak, if you will, of all the TPOs, these individual letters that are printing. It's the peak or the largest amount of in a given session. There are a lot of things like ledges that you see here or singles that print that can really be very helpful in understanding where other time frame players can come into the market, those being big funds, big investment firms in a particular move. The single concept and the concept of ledges are very detailed in the book Mind Over Markets and some of the other resources I'm going to show you guys. And one thing to understand is my goal is not to completely teach you guys market profile. Many of you already know it, but just touch upon the things that most of us overlook in the course of a day that can be super helpful in knowing what's going on and what's the market telling you. The question you should always be asking yourself throughout the day. So you have your value area high and low. You have your point of control. As you can see, the pink area behind it is actually the volume that's accumulating. So even though we spent most of our time in terms of time trading at, in this particular case, about the 28 level, we spent most of the volume came in much lower. So it tells you two pieces of vital information. You know, where is the what's called VPOC, which is the volume point of control, and the regular point of control just based on the TPO count. These are dynamic and they move throughout the day as they continue to build out. I don't have this particular chart split out, but I can certainly show you on the software how it splits out. But what's most important is that looking for any potential changes in the market, you know. So we've spent a lot of time here going through the RTH session. You can see that there's some notches missing in the profile. There's a couple of ledges up here. There was probably an inconsistent high. So there's a lot that can be discovered from all this. One of the reasons I also decided to start a trading room is so that I can instruct folks, you know, sort of build a global trading virtual desk type thing is what we're trying to do. But at the same time, I can, you know, go through all the pitfalls of trading this in the course of a day. And the beauty of the profile in this particular type of process is you can apply this to almost anything that is a mean reverting market. So whether it be trading something like the ES, some people would rather trade, you know, the NQs, which is a NASDAQ contract proxy. Some people would rather trade the Russell, which is the TF. Some people would rather trade oil. You can apply this exact same profiling to the currency markets. Although I would only suggest if you're going to do that and you want to trade currencies or currently trade, you cannot apply this to the spot Forex market. It can only be applied to a volume-based active contract that trades. And that's why often if I want to trade currencies, I almost exclusively will trade through the CME's currency future products. So it would be the 6A, which is Australian dollar, the 6E, which is the euro, 6J, Japanese yen, which has been a fantastic trader recently, and has really been a huge component of this complete mess we've seen in these market movements recently with the carry trade being unwound or put back on in today's case. But, you know, so you can really apply the profile to almost any mean reverting market. Now, with something like commodities, the profile carries less weight. So there are other tools I can teach you if you guys are interested down the road, but, you know, oil is not as much a mean reverting market, nor is gold. So you can use it. You want to be cognizant of what the profile looks like, but it's not going to be the most important tool, in my opinion, for that type of trading. So if your guy wants to trade soy or, you know, soybeans or corn, you know, one of my buddies trades nat gas. You know, I don't know that the profile is as good for that. So let me go to the let me go to my actual chart system here. Show you the software itself. Oops, I guess I probably should have gone through the disclaimer disclosure, huh? Keep all the attorneys happy, but if you guys want to see, this is my website, the just fxcstrader.com. You can always go, for instance, at the homepage if you want to see the disclaimer. You scroll all the way down to the bottom. You just click on disclaimer disclosure if you want to read any of this. A lot of this is the CFTC stuff, which you guys see right in here. This is important. I think that what is cool about disclaimers and disclosures, as boring as a lot of this stuff is, there's really important stuff in there that is almost completely along the same lines of mitigating risk. And that's a lot of what I teach traders. And then since I've been, you know, mentoring traders over the last couple of years, the risk management is one of the biggest parts of any education. And, you know, looking at that. But let's just jump into the charts real quick. I don't want to take too much time up here. So I don't know if you guys can see this, but here's the nutcase rollover day that took place today. Here, I'm going to get an update here. Cool. So as you can see, just applying the principles of the profile to what's going on currently, we moved from the Globex session, which you can see right in this area, to an opening print this morning of 1604 on the ES in New York. And immediately we did what's called an open test drive, which means it's an opening type. It's a market profile concept that I can go through. But there's 4 or 5 different opening types. And the opening types, if you memorize them, they can give you a huge edge in what I call not stepping in front of the freight train. So as we opened up this morning, we auctioned down, or we tested, if you will, down right off the value area high of the Globex session and then we immediately went back up, and it was a monster squeeze all day. Now, one caveat to the analyzing the profile here, both the last 2 days, you can't read that too much into this stuff because this was a contract rollover day. And oftentimes with contract rollovers, you'll see a huge liquidation the day before because the contract's expiring, and you'll see accumulation the day of rollover, which is what we've seen today. So a lot of data is off if you're using DTN IQ feed as I am, and I also have CQG coming in through AMP, my futures broker, into the system. You get conflicting data. The fact that CQG had 2 outages last night on their platform is just a great a great example of why I don't trade on rollover days. So rather, I had to focus on putting the slides together for the presentation and talk about what I think is important for you guys to understand. But looking at the profile today, we had a monster value area, and on my chart, the gold area of price on the right-hand side is the highlighted value area of the end of the whole day. So how it finished out. Huge value area. Can't read too much into this. Tomorrow will be a different story. We'll be able to start off with a clean slate, clean data coming in. Again, this is the kind of pitfalls that I saw so many people falling into. That is why I decided to build this website and have a trading room. And it's a way to keep people on the path to profitability and keep them away from all the pitfalls that come with the lunacy that these algos have been ripping through these markets recently. So, and by the way, if you're afraid of algorithmic trading systems getting in the way and really messing up your trade, I say don't. I say exploit it. And the beauty of the profiles, you can absolutely use this to exploit and ride the coattails, as I like to call it, of these algos. Because these algos, some of them are sneaky and they'll do real esoteric stuff like rip through Twitter feeds and all that. But most algos are just based on simple math, simple mathematics, and it's mean reversion type stuff. So is a Bollinger Band getting too stretched, or is a Keltner channel getting too stretched? Are we going to snap back? Where are all the orders on the systems? Where are all the stops? The algos love to go and terrorize all the stops, which you saw not only all day yesterday on the way down, and to a certain degree also extended in the overnight session last night in Globex, but you saw the whole way up today. And looking at where we ended out and so forth. So big value area for today. If you go back to the previous day, let's just skip the Globex session. It's tough because I want you guys to be able to see this, but it was such an elongated profile today that it's hard to keep it on the screen, so I have to keep scrolling up and down. But the beauty again of the profile is, if you're taught the right way and you understand the concepts of how to read this, it can give you the most insight of any indicator or chart out there that exists. And that coupled with the right footprint chart to watch the actual order flow, as I do here with my 5-tick PNF reversal chart on the ES, gives you some great insight into how to execute the trade. And I like to say that the footprint is my fine tuner of the actual execution that I do. So, let's keep on point for this webinar, and I want to keep this tight, but the brown line represents the volume value area of the day. So just based on volume that executes, this is the 70% range of the day. Let me grab my little happy black pen. So right inside here in the Globex session is where 70% of the volume executed. Whereas inside the magenta bar is where 70% of the time was spent. See the difference? Volume brown versus time, volume brown versus time magenta. So what can we glean from this? Well, I would say that the overnight inventory without question was getting ridiculously short. Why? Because we spent the vast majority of the time in the bottom part of this profile. Thus, as soon as we got that open test down, drive back up, I had a really good feeling, especially since it is day one of the September contract for the ES, that it was going to be a monster short squeeze all day. So I purposely stayed off Twitter. I didn't post any trades, which I rarely do on Twitter anyway. And I kept everybody, hopefully, at least to follow me, hopefully, from taking any sort of short today, because you just gotten your ass handed to you all day. So looking at the profile again, let me just erase all this stuff. This can be kind of confusing. All right. So as we move up, cool. So as we move up in the profile, I would look at this as really an anomaly day, but I would describe this day as what's called a triple distribution trend day up. And I know that's a long term, but you always want to get a feel for, in auction market theory, what the auction was telling you. There, depending upon the author of it, there's 4 to 5 different types of days out there. And as we can see, this was straight up today, all day long. And, lots to take from that. But if any of the questions surround these charts, and don't be confused by a lot of this stuff, guys, I can show you, what all this stuff is. They're just, my charts are all custom built, and I have custom definitions for most of this. I have automatic levels that import each day. And really the point of this is across the 8 screens that I trade on, I just want to make sure that all of the important things come across on each chart. Like high and low volume type of nodes, where's all the volume executing at any given price, regardless of what time frame you're looking at. So that kind of dovetails me into the last part of the discussion on this. Let me see if I can just move this behind. There we go. All right. This is a different version of a profile chart. And this is called a composite. And this is based on either a daily, weekly, or monthly time frame. And you're looking at essentially a daily time frame of the ES. Again, we're still sticking to the S&P mini contract. And we've gone through and we've looked at what's called a large frame of the market. So this, over the course of the last few months, with these navy shaded peaks and valleys all the way back to 10/4 of 2011, this is data that comes into this chart from like a year ago in the first part, and then all the way back since 2011, you have the full data coming into the composite. Now, why is this important? If you're asking that question, there are a million different things I can talk about on this chart, but in the bottom line is over the course of just this last balance area, since the beginning of May, we know where all the volumes executed in one shot. And this is why I love the profile. So using auction market theory, we can see in its entirety on one chart where everything's executed. And why is that important? Well, if you look at these high volume nodes, which is represented by the green lines, and you look at the low volume nodes, which is representative of the red lines, look at how price has stopped or halted or reversed at every one of these lines, almost exclusively. So if you knew nothing about candlesticks and you just used a composite and you put, obviously you had the right data coming into and you had the right settings in the chart, which is the beautiful thing about, IRT and market delta, you can see in one shot where things can go. So did it surprise anybody with this monster squeeze today that it damn near stopped near the 1640 area? No. Why? Because it's a huge valley where there was no volume. Carries almost as much importance, because many times it leads to a gap, as an actual peak would. So a valley in volume shows you that very little executed through there, and a lot of times price will just run through that gap. So another thing that the composite-based profile and keep in mind, it doesn't have to be over the set of time that I have. You can look at, broken down balance periods, like forget about the previous portions of this and just look at the last 2 months, and you can frame that out. So I think once I explain it to a lot of my students in the past, they begin to get it as to why framing the market is most important. And, looking at like, heck, you can see that there's not much volume up here because, we've never really ever traded up there, but it also using these fractal numbers that you see here, it can, sort of give an overview of all that. So if you're asking yourself the question, well, how do I tie this into becoming consistently profitable? The answer is you really must learn to frame the market on a longer term or a mid-term type basis. That way you understand what's going on. Most importantly, you can't develop a bias. And developing a bias is very detrimental to the psyche of remaining what I like to call an agnostic trader, okay? I have no bias. I don't really care where the market goes. All I care is that it's moving in that direction in a consistently predictable and non-erratic manner. And that's one thing I love about the profile is it teaches all of that. And, there's a zillion more things I can get into about this, but, the important things to take from this is what's your start date, okay? I prefer to look at all of the data, especially in case there's a flash crash, all of the data back to the biggest recent swing, okay? And the 4th of October in that year was that monster swing up. Now, is that data down here relevant to trade that's going on currently here? No, it's not. But in case something big was to happen, you want to have your longer term charts be able to handle, a monster down red bar, for some unforeseeable event, which, looks bad from the standpoint of here. Because if you don't look at the market in this kind of context, you see something like this happen, don't understand what rollover is, you're going to be like, hey, market's, probably going to go back down and test the most important level in all of these last 4 months, and that's basically the 1596-ish level. It's a huge level in the market. And, within about 4 or 5 points in this, we bounced once, we almost went down and tested it again. So it's really easy to see it if you can construct this type of chart. So you just erase this, all my scribbly. And let's use so I hope that I have not gone through and confused anybody more. I've probably maybe asked, gotten more questions than, but that's the purpose of anything you guys want to ask me. But let's talk a little bit about, if we may, the consistent profitability, because it's the message that I always want to be on. And if you look at the next slide, which is the 6 key elements to consistent profitability, I'll talk just briefly about some of this. The most important thing to me when I first started trading in the futures market, which was back in 2006, was if I'm going to do this and I'm going to put my 10,000 hours in to become a master, who can help me cut my learning curve down? So, but most importantly was the commitment. And not to say that you need to have 12 hours a day for almost 9 months straight of business days that I put into the beginning of learning this. But you need to have the commitment, and I always liken that to a pro athlete. The guys that win consistent, spends his life as a top NFL player, wins lots of Pro Bowls, maybe or not, he was a Heisman candidate, maybe he won a trophy, so forth. The dedication of, internationally, really good soccer players and really good football players, NFL, it's off the charts. I mean, I've always impressed, by somebody, that has put in all that kind of time. So the number 2 being positive, I can't stress this more. Hopefully you guys see that I'm a pretty positive person. I'm not, running around dancing through the streets all day, because we all have crappy days, let's face it. But overall, I've seen the inside of this business, and the people that put the commitment into it, they make huge money trading. Huge. And, one of my best friends, the guy consistently puts up $150,000 to $175,000 months every month in and out, trading the exact same stuff that we do, but with obviously much larger size. And he maybe puts 4 hours a day into these trades, if that, sitting in front of his screens. Obviously he's put a lot of time in the past and so forth. So with all the negatives that's out there to trading, which it just annoys me to see all the negative stuff streaming across everything from financial media like CNBS or any of those guys on Twitter that, are not consistently profitable. They don't have a positive attitude. So, don't fight the markets is kind of dovetails with what I said in the past about bias. And, you always want to focus on being right, but you don't lose touch of understanding that the previous 3 things are what help you become right or wrong. So, kind of like don't forget number 3 should be part of number 4. And then obviously the most important, in my opinion, is risk. So, I can talk a lot I think it's going to be probably my 3rd or 4th in the webinar series about risk. I'm going to have an entire webinar on risk. I'm going to show you guys exactly how to execute a trade based upon the other things that I use, how you place a trade on the dome, how you manage the trade, and what size to take depending upon how capitalized your futures account is or not. But just understand that in trading, I always tell people that, if you're going to get an education, go out and become a physician. You may have spent, 8, 10, some cases 12 years, including your residency, becoming a world-class physician. You've probably spent, upwards of 300 or 400 grand on that education, maybe less. Don't be afraid if you're well capitalized enough. Don't be afraid to, blow out a futures account or 2. I know that sounds crazy, but you learn a lot from that. But what it does teach you when you blow out a couple of accounts, as I certainly did in the beginning in 06, is it teaches you about managing risk. And all of that is critical to being consistently profitable. But, I always tell people be conservative. Don't use all the margin that is offered by your broker, depending on the firm you trade with. You always hear these advertisements for $400 margins or, $300 margins. Or in the case of my fund, I can lever it all the way up even more than that, which is ridiculous. I don't use any of that margin. So I'm conservative with the trades. I take maybe 2 or 3 trades a day, if that. Maybe one's in oil. I wish I was long oil the last couple of days. I've been taking more long trades on the euro recently. But as far as education, the evening reviews that I do, which detail movements in the market based upon all of the charts that I just showed you, it's most important for me they can, look at how you would say, can I do this trade or can I not? But, number 6 being important too is your level of absorption. Is it high-low? As I always say, find the right people and be a sponge. But I was never able to find, other than a few people that turned me on to Market Profile, and Twitter didn't exist back then, which would have been much easier to connect with the right kind of mentors to sort of cut my learning curve down. I had to put the time in. I blew through all kinds of charting programs, TradeStation and eSignal, and, all the rotten feeds that come from the different brokers. And my absorption rate is very high, but I did not find the right mentors. I had to become that person myself. So, I always tell the people that, especially some of my previous students, is be a sponge, Some of my friends know that, I'm constantly asking these guys questions, probably to the level of annoying, because the next thing I'm sort of trying to get through is the statistics on this. And, I'm not a big back testing guy. I'm not a big stats guy. I understand broad stats when it comes to profiles. You know, how many times does the overnight high or low get broken in a particular sampling versus the Globex session? You know, what happens after a trend day? What happens after a, you know, an open test drive day in the market? You know, an open auction reverse. You know, all the different types of things that, you know, if a lot of these concepts seem foreign to you guys, I would highly suggest that you know, read the book. I'm going to put up, actually, I don't know if I have that slide. Well, I could just drop the browser in front of the screen and show it to you. I have a really good resources that there, and there's also some excellent videos on YouTube by guys that are, you know, real pioneers in the industry, like, you know, certainly Jay Dalton and Peter Stedelmeyer, guys like Dr. Kepler. So I can show you some of the resources that can get you guys a little more educated on, you know, how to read the profile if you're kind of using it but maybe don't know how it works, you know, maybe to get a little better. I hope I've shed some light on that. So these are the key things. You know, when I was trying to get the consistent profitability, which took me about 6 months after I started trading futures, I put this list up on the wall and basically just read it to myself constantly all day. I mean, my wife, it just would drive April crazy because, you know, we were having our first child at the time, and this list was posted all over the house. So I even had it on the dashboard of my car. But it's critical. So commitment positive, don't fight the markets, focus on being right, risk, and, you know, be a sponge. So this is more of a, I don't know, how should I term this? I look at this section, which I actually wrote a blog about. You can see it on my website. I always am looking for an edge. Certainly market profile and the understanding of the composite or the auction process as a whole will give you an edge, especially if you know how to interpret the context that it's showing. But, you know, what's important is that, you know, you can't fight the market. So if you have sporadic success, it can be positive or negative to what a lot of folks call your inner monkey, and that's your psyche. You know, getting hold of him. You know, is he going nuts? You know, like the old Samsonite commercials where the ape was throwing the luggage around in a cage. You know, or is he tame? And you know, I am, you know, I'm Italian by heritage. So that has a tendency to make me a little more intense, maybe a little more emotional. So, I mean, I understand that I need to get a grip on that and, you know, sort of calm my inner monkey. But a tremendous amount of calmness comes from understanding what you're doing and more importantly, going out and testing it. So, you know, you build your methodology, you know, you want it to be unshakable and, you know, have the conviction. So be calm. You know, the markets are always conniving and ingenious, and especially with a lot of these algorithms and the proliferation of high-frequency trading around the world, I think it's creating opportunity. It certainly is creating volatility. And as traders, volatility is awesome. When the market's dead, it stinks. And that's why in what I teach, you can actually use that to trade almost any market. So if you want to learn to trade oil, much of the same stuff, whether it's analyzing the euro, which is this chart right here, it's the same thing. The composite time's different, the, you know, the calculation of what's going on, but you can see how, you know, look at all these candles, they stop and reverse in many cases right near important peaks and valleys in volume. So let me just jump back to the slide. There we go. Cool. I like number 7 the best. Being prepared and having put in the work results in the bringing together of your intuition and confidence. I wish I could have ingrained that into my head in whatever manner I could have in the first 6 months, because I spent a lot of time not having confidence. When all the while I had certainly learned the right stuff in my first couple thousand hours of my journey, which I really wish I had the ability to cut in half, but, you know, I was prepared. So What I get the most questions on, and we'll go into Q&A real soon. What are we coming up on? Coming up on 50 minutes. So we'll switch to Q&A real quick in the interest of time. But I get asked a lot. Let me just bring this screen down. There we go. I get asked a lot, what is my process? And the mentoring process, let me just find that document. There we go. This is too big to put on a PowerPoint slide, so I figured I'd just show you the PDF file in of itself. This is the path to consistent profitability. Probably among the best of my trading buddies who actually helped me put this together, this is the path that I feel someone should be on. So once you've read the books or watched your 6 or 7 hours of videos or 10 hours or how long it took to absorb that broad concept, you want to be able to look at the profile and see what the trade setups and be able to recognize them. So looking at the trade setups, you want to get yourself to greater than a 70% win rate. Size is not important at this point. You want to be able to add trade management in with this winning percentage. Okay, the path to consistent profitability is not an easy one in my opinion. I am very methodical about how I coach this path. If you guys haven't figured it out yet, I'm pretty anal. So I want to make sure I have everything down cold and in my sleep before I move on to the next step. This is what I actually put together with a lot of my students. So this is the path we take. If you want, I can email this document to anyone. I don't have this up on my website yet. We need to be able to just compress this in some form to stick it up on the site. But I have a more generic overview of the actual mentoring process. But if that's too much for you guys, or you already have the education and you just want to come into a trading room, we have the trading room. It's going to be live as of Monday, which is cool. We've had it off and on for the last month or so with great success, but I'm actually going full-time live with it come Monday morning. If you want the charts, so forth, let me just jump out of this so I can show what it is I do each day. So with the evening review, the daily charts, you just basically go to the home page, you click on members access. That takes you into the members only section of the website, and you just click on enter daily charts, and you can see that daily charts for Thursday was updated as of yesterday. I have not done tonight's review yet, and then all you do is just click on login to sign up, and you can view the charts. The reviews I go for and through are pretty detailed. I show full pictures of everything, including an entire sheet on what's going on in the contract. So whether it be highs, lows, any potential signals that have formed in the market. I'm going to be doing this for both the euro and oil coming up. I wanted to get everything kicked off with the ES first, make sure this website's running smooth before I put a greater amount of content into the evening reviews. I've seen a lot of people that post daily and evening reviews on markets, but I just don't like the format that they use. I don't think it's practical or usable. You don't get to see the levels like you would on the composite. I mean, a lot of people, if you don't have the screen space, print the composite off and, just basically look at the composite all day as you're trading. It'll help a lot. So, but essentially that's it. So why don't we open this up for Q&A. Let me just put that last screen up. And if you would please, Eric, let me know what questions these guys have.
Yeah, Steve, we've got technical issues on our side. We can't see the question pane. You're going to have to take a look at that real quick.
Okay, excuse me there. I had to take a quick phone call. First question is, how long is the learning curve typically? I don't know that there's one answer for that, and it's going to depend upon a number of things. How capitalized one is, how much time you can put into it, okay? So if you're retired, you're a retired executive or something like some of my previous clients, they have some time. And, we spent, in the case of the last two, we spent a mass amount of time together. These guys certainly got their money worth in doing this. But I would like to say, if you follow the path that I've outlined, and, certainly can be much more detailed in a phone call with me or whatever, but if you follow the path that I've detailed, you should be consistently profitable, and that's putting in, a pretty good amount of hours right up front, folks. You should be consistently profitable in 4 to 5 months. You may be consistently profitable in a month, but until you have the recognition down of all the different trade setups that I teach, in being able to see these setups as they develop, and actually one thing I forgot, one really cool thing about the 2 software packages that I talked about, and I don't, get any endorsements off these guys or anything like that. I probably should because I've referred so much damn business to them. But looking at these packages, they allow you to replay the market. I don't know if you guys have that with other charting software. There's a lot of stuff out there, but the ability to replay the profile, I think, is fantastic. And once we're getting everything out of the way, including this webinar, I think this week I'm going to shoot my first movie where I just basically go in with screencasts on a Saturday or Sunday, and I go through in a speeded up fashion what happened in the market all week. And I do that a ton with my students I've taught over the years because it teaches them exactly what to see in the replay of the profile. But looking at getting back to that question, it's very hard to answer. I can promise you this. I can give you a better answer if you answer some of those questions first. Does that make sense? Fair enough? Next question is, let me just read it. Let me just scroll back up here. Yeah, I apologize. Looks like you guys can't see the certain screens. I apologize for that. You focus on one product or try to trade among all of them? The answer is, do you want to get proficient and consistently profitable trading one product? And I highly suggest that be the ES. Then you can move to other stuff. Almost unequivocally, the biggest traders that I know, they started trading, and some of them either became masters trading individual equities, which you can use a profile for as well, works excellent, or they wanted to get into trading using other products. The only thing I would caution you for is using it against trading spot forex, which I do not trade, nor have I ever. So I don't like the fragmentedness of it. I don't like the fact there is way too many dirtbag ass brokers out there trying to get you to execute forex. You can never see what the spreads are in a lot of cases. It's not worth it. The beauty of a CME is it's a centralized exchange. The volume is calculated by the exchange. It's not dependent on some broker's book, and it's just a lot more clean. And more importantly, you can analyze volume and price in unison using that type of chart. Let's see what the next question is here. Okay, it says, where do you go for market news to stay on top of things? If you guys follow me on Twitter, and I always suggest this to everybody, set up a Twitter, or what they call tweet deck, if you're not familiar with the app, that allows you to have live, full, automatically streaming of Twitter, whereas Twitter itself doesn't automatically stream. It's a pain in the ass. Go and look at the followers that I follow, and especially someone like Trader 1806. And if you would please, Eric, type that in. Actually, I'll just type it in right here. Trader 1806. This guy is the man. Let me see if I can get this to the entire audience. Here we go. Follow at Trader1806. He is, I don't know what this guy's doing, but he gets news out faster than all of the APIs do. And if, whether it's a big jobs report in the United States on, the first Friday of the month, or any of Bernanke's, ridiculous testimonies, or anything that breaks, certainly any type of manufacturing index, all of the news. But I rely most, and I'll pull it up on the screen, I rely most on the calendar that is provided each day on Forex Factory. This is the most accurate, most comprehensive of what news is breaking. So much so that when you see my evening reviews, I'm actually cutting and pasting this because I like it that much. So as far as getting the news, I use that. I follow all the right people on Twitter. I have CNBC and Bloomberg streaming in the background, but they're both on mute because I just can't stand listening to the long-only crowd. I also follow, let's see if I have that bookmarked on this computer. I have 2 other computers that stream all my news in, so I don't have a lot of the bookmarks on those. But essentially the most important one is a centralized API called Between the Hedges, and it's just hedgefundmanager.blogspot.com. If you guys want, you could certainly send me an email if you're confused about any of the places that I go. I spend some time on mypivots.com, which is a site that allows me to check all of my numbers and that my data is updating accurately and reflecting all the numbers as they should be in the software, sort of like a checks and balances each morning of what all the numbers are. But I look at I've spent a fair amount of time building a followers list of the people I follow on Twitter. I only follow people, for the most part, that aren't friends, that do nothing but put out concrete information on the market. New highs, new lows, what's breaking out, what's going on in financials, what's going on around the world. Everything right now has been focused on the yen. And with the ridiculous rocket up in the yen U.S. dollar and the cratering of the Nikkei index, which had rocketed up much before that, is creating a genuine amount of unrest in the currency markets. And those are creating tremendous unrest in the equity markets, and it's leading to lots of accumulation and distribution every day. It's almost like the market has no memory the previous day of what happened. Forget about the last 2 days because it was contract rollover and all the numbers are messed up and all that. But there's a whole bunch of other places I go for market news, but that's basically it. What would be the next steps if I want to learn more? If you would please, Eric, maybe I could just set up this page here. I would probably follow me on Twitter, but I would also send me a note. So click on Contact Us at the bottom of the page and fill this out. Or if you want, just send me an email directly, steve@fxestrader.com. Please, if you would, give a short bio on yourself, or if you want to give me a LinkedIn link, that's fine. But I want to see a couple of things. I don't need to know numbers. Frankly, it's none of my business. But are you capitalized? What kind of time do you have? What kind of charting and package programs? My clients get all of the definitions to my charting and packages when we do the mentoring, which is an awesome perk because I've basically built everything for you. It's just a matter of teaching you how to drive the F1 car instead of how to build it. Send me an email, give me an idea on what kind of time you have, how much time you put into it, where you are on the consistent profitability curve, if at all. What do you want to trade? I can tell you that I can teach you this and this processes. It is best applied to the futures market. So the 4 contracts domestically that I've talked about, you could trade the DAX using this. Those are pretty much the 5 that gets most traded. So the ES, YMs, maybe to a lesser degree, the TF, which is a Russell index, the NQs, which is a NASDAQ, and the DAX, which is the the German equivalent of the NYSE. And then you can use it to trade the 6E, the 6B, the 6J, the 6A, which is basically all the currency majors, all US dollar. I don't recommend using this to trade commodities. So if you want to trade anything else, I would say I could certainly teach you how to use the candlesticks to trade that stuff, maybe with a second degree of the profile, but I would not use it to trade other stuff. You can also choose this to trade individual equities, which I don't really screw around with. And I'll tell you guys this, because I get asked this question a lot. Why don't you screw around with individual equities? Well, I do trade them on a swing basis. I don't day trade them because in the early part of 2006, I was fortunate enough to have a monthly subscription at the time called a magazine called Traders Monthly. And it always detailed the top 100 traders each year, whether they were independent guys, they work for hedge funds, or, they traded for a big shop in New York or Chicago or somewhere globally, is one thing that was completely evident among all these guys: none of them made that kind of wealth trading stocks. It was almost always commodities, currencies, and the futures markets. So I said to myself, hey, that's where the leverage is. It certainly is some awesome leverage if you know how to harness it. It can kill you if you don't, but it's important in that. So if you can kind of give me an idea on where you are in the learning curve and where you are in time, this is also what have to be a match with me, because I only mentor students after the market closes in the beginning. And obviously we're running the trading room for anywhere between 3.5 to 4 hours a day. So after the trading room finishes up, sometimes I'll run the trading room the whole day, depending on the mood I'm in. You can only talk so much before you get burned out. But I usually like to, since I'm Pacific time, market closes at 1:30 my time, I have time in the afternoon. I have, most of the way we run the fund is mostly automated. So I don't really have to sit around and analyze stocks and do stuff like that. So it's a pretty automated process. I figured, hey, I got some extra time. So if anybody's interested in any kind of mentoring, just send me an email with your details, and we can get together. If you want me to email you that consistent profitability sheet I showed, so you can see the detailed steps and what everything looks like. But I'll scroll down here so you can kind of see the steps. And then what I'll do is see what the rest we got. What other questions? Trader 1806. Okay. All right, so Eric has posted the 15-day free trial link. He's also posted the website and the resources. There we go. Okay, good. So the resources link is in there. Cool. Anybody else got any questions before we wrap this up? We're running a little bit past the hour, I said. I don't want to drag everybody's day out. But hopefully this has been a good presentation, guys. Hopefully you've gotten to be able to take a lot from this. Any other questions? Okay, I actually just got an email. What do we do in the trading room each day? So the room starts off at 9 a.m. Eastern Daylight Time, so East Coast, and we go through my nightly review, and we put together sort of a plan. We want to accomplish a couple things. Obviously, review what's going on, review the context of the market. We want to also put together what's called a scenario plan. What can happen today based upon the framing of the market the last couple days, the volume that came in and all that. But most importantly, the goal of the trading room is to give you guys bits and pieces, which is hard to do in a 1-hour webinar, and keep you out of the way of trouble, keep you out of the pitfalls. And likewise, some of my students in the past caught something that I missed, kept me out of trouble, which is awesome. So it can be a collaborative effort. So I'll move back because I'm getting hurried up for time here. Let me just quickly move back. There it is, last screen. Any other questions? Cool. I think I answered them already. Cool. All right, guys. Want to thank you all for joining today. First in the 4-part series. Now I got to figure out what I want to do for 2, 3, and 4. But if you guys want to give me some feedback too, you can still send an email to that address and maybe give me some feedback what you think you want to see. Keeping in the theme of market profile and being consistently profitable. If you want me to drill down more, send me an email with that fact. But thanks, guys. Be well.